TGIF, Ann, Alexander, Michael, all you warriors. Hope everyone had a good week.
Good early morning, Dale. TGIF.
Hi, Kman. How are you, buddy?
Good, very good. Hope you too.
Yeah. Glad it's Friday.
Yeah.
What the hell is happening here?
I could do with a day between Saturday and Sunday as well.
Yeah.
I was just going to say that. And good morning, guys. I was going to say the same thing. I know, like, please, if we could have a 3-day weekend, like Stelios gets one every single week, why can't the rest of us?
Because you're not as smart as me. That's the thing.
Next
morning.
week.
We are not Greek.
Next week, we get 3.
We're not Greek. Only the Greeks can have it still, right?
So dollar pulled back, still holding the breakout. I think it's going to test it, if not today, sometime next week. And I think we're going to close under it. It is a signal, so I'll bring it up. This is a 2-week reversal in cable. It's a simple little method. You just count back 2 candles and check the closeout at the end of the week. And if you're above it, that really takes out 10 days of trading action, right? So you have a 2-week reversal there. Still have one here in Euro. Definitely have one in the Dixie unless it closes back over 365. So that's another 70 higher. So it is possible at least a short-term top in Dixie, short-term low in cable, pound, and Aussie too. I think Aussie's right there at the 2-week off number. This is it right here.
We just got some comments from the ECB. Kman, were you a little surprised that the euro actually fell on that headline?
It didn't really move, but we had similar from various ECB and other European Central Bank members. They're all saying July is now likely the lift-off time, but the problem is they will do 25 BPs more than likely. I mean, 50 would be a huge surprise to the market, at least. But in the meantime, the Fed would have raised another 50 BPs, and then the week after ECB, they have another meeting. So if you take into account that ECB is going to do 25 to lift off, and the Fed will in the meantime have raised another 1%. As I was saying just in the room, to be long euro dollar costs money now, and probably and likely will cost even more. So rallies, yes. Reversal, I'm personally doubtful.
Okay.
Yeah, we probably have to get back over 110 to declare a bottom. Well, that was a pretty big area. Right here was a wedge and an overthrow and 110, but I don't know. I wouldn't be short
at this
either.
Stage, Dale, I'd be happy to get to 108.
Hey, 108, yeah. 108
I think that could happen.
Number, in my opinion, as well.
Yeah. Okay. Any other comments came in? Was that enough in the end? That little, 2-3 day pullback. The rally seemed more feeble to me.
We're bouncing off twice now of the 127. We are building this range right now, and I wouldn't fight it. But has it got the power to go back up? As soon as it rises, we've got 2 or 3 comments again overnight from the finance minister, Kishida. They seem to be preparing Kishida was even talking during the G7 meeting. They seem to be preparing the other G7 members for possible interventions. So it's probably limited on the top side as well, dollar yen. Ryan and I bought it off the 127 yesterday, and but we have already been scaling back on them. It's just a fact of playing those levels. 127, 131, the big range. Inside, we've got a very nice 129, 10, 15 now. Just play the ranges. We had a jump in CPI in Japan overnight, but that's a lot of it is imported inflation. and not really local inflation. So we've got, I don't know, I think trade the ranges for now in the dollar yen. And if 127 breaks, it's probably going to trade back to 125, possibly 123, 121, who knows?
Yeah. So you think 127 is the level? I've had a bid outstanding for like a couple weeks now, just below the 126 level. I think let me just confirm this with my charts.
You could grab them, Blake, if you want. Yeah, there's some confluence. It looks like the 200, the 50-day and this little speed line are intersecting around, I don't know, 126 actually.
Yeah, and I was looking at the 126. The highs right here. Basically, it's like 125. Let me see what that. It's the 2015 high. That was like the top of my support zone. Well, it was resistance zone, and then it's support zone for me now. So any dips down to there is what I'm looking for. And so, Kman, the reason why I say you're probably. Well, I was going to ask you if you're looking at 127 because of those lows that were just there. Okay.
And then it now we can argue, or we could argue that it's now a double bottom, same as just above 131 we have the double top.
Yeah, got it. Okay.
So I mean that's just trading off those levels to be.
Yeah, and just to confirm, when I looked at this double top here, this is going back a couple weeks ago. This double top right here leads us just below 126, if I'm not mistaken. It's right, just like 125.70. So like right to basically around 126. That's why I'm like, well, theoretically that's where we should go. And then, you can see this blue channel that I'm also following. I still think that we might get like one last dip to that, but I'll be the first one to admit I have not been I haven't had a good feeling about the yen since we've gotten towards the 130, because I got to a point where I'm like, okay, I'm done trying to chase it higher and buying it, and I felt it was way overbought, too overbought to be bought, and then too strong to be shorted. So I just kind of left the dollar yen alone. Even on this double top, I didn't trade it on the short side. I was more I've told all of our, everybody in our community, I've been looking just to buy dips in this. I'm not looking to fade it per se. And you can see that I'll just quickly point out, the lack of clarity that you see in other yen pairs. So like you have the sterling yen had this head and shoulder pattern. How many people got short and then got that stuck right in their face? Aussie yen's been a little bit better behaved, Kiwi yen also, I mean, it's been heavy, but the Euro yen, we had a head and shoulder pattern, but you can see it, same type of thing, right? Everybody gets short, and then all of a sudden you get it stuck right up in your face. It's like, well, why even deal with it? So I'm, for me, I'm just looking to buy dips in the dollar yen, but I don't even know if that's the right trade. Now you got me all freaked out, Kman.
No, but it's all. I think we should treat it relatively short term right now, unless you've been really playing it since 110, and then you're still in the same thought of mind to buy dips. Then you can do it either at 127, either where you think it should be bought around 125, 126. If you're a long-term player, this is just a correction, right? If you're a shorter term player, you can do whatever you like inside this 127, 131. You can go long and short the day after if you like, because the levels are there. The levels are there to trade off. But in the medium term, as long as Bank of Japan doesn't move, why be really long yen? I mean, for more than a few sessions.
I mean, that's true. I mean, it all boils down to what central banks are doing and are giving us expectations. I actually I was talking to Chris Weston, and I asked him, like, what would you buy? Like, what would you buy as a safe haven? And he said he would buy yen, and I didn't agree with him. I disagree. Let's put this into context here as far as what we've seen, if you have the S&P, and I'm just going to throw that, I'll put it up here so you can see it. We've had the S&P just, go from, what is 40, whatever, 800 down to 4,000. And look what the dollar yen has done. So, I mean, unless yields really start to move lower, like a real breakdown in yields, which I guess it'd be possible, but with the Fed doing what they're doing, I don't know. I mean, unless bonds go bid from a risk reward perspective, I can't see the yen strengthening a whole lot. Do you guys have any thoughts there?
Yeah, I think it's right. It's exactly that right. Now we are waiting to see what bonds and stocks are doing. Like dollar yen, the rally has to do a little bit with the US 10-year back above this 283.85 zone. It's trading at 286, and then once you're there, the dollar yen stopped, or the yen pairs stopped together with the yields. The S&P corrects, so the yen corrects as well. And I think we're going to be stuck to those things. Yields and stocks.
No, speaking of bonds, I want to talk a little bit about the bond market, because I'm looking at this inverted head and shoulder pattern here. I've been staring at this thing all week, and this is one of those that I do want to watch this carefully, because we challenged the neckline yesterday. I've been looking at it all week. I think that if we get a rally here, it's more of a risk. They could work either way. A lot of people think it's only a risk off type of thing that bonds would rally, but also you can have the stock market rallying too as bonds, recover. Because if bonds recover, you start to see a move up in bonds, yields start to drop. The stock market might see that as a good thing. I mean, Dale, what are your thoughts as far as, you look at this real estate market, and it's really hot. Seems like it's cooling though. But a lot of people would think that if yields started to come down and, mortgage rates started to ease a little bit, that could be a swoon for the stock market. Wouldn't you think?
Yeah. Jim Walsh kind of nailed it. People should subscribe to the guy, don't you think? He's pretty good.
He's great.
He was looking for like a rally in TLT to 22, and he has it labeled as this is a 4. So after this pop in bonds that we get off, that head and shoulders, maybe we go to the objectives. Then there's one more low for 5 is what he's thinking. Yeah, but I know some people that think that was it. We peaked in yields even with the Fed.
What do you think there, Kman? You're about ready to say something.
No, that was Greg, actually.
Yeah,
hello, Greg.
I didn't ask for Greg's opinion.
Yeah, of course.
Did you hear me say, "Hey, Grega, what do you think?"
No, I said.
Is that your count, Grega? Is that your count too, or?
By the way, I just want to say, Grega peeked in. I was actually excited to see him here, because I'm sure a lot of people would love updates on the Elliott wave counts that he sees. So, what are your thoughts here on yields and bonds?
Actually, I think, like Dale mentioned, that we are headed higher for this wave 4, and we actually came out very nicely out from this wedge, which retested these 2018 lows. So if you go back to 2018 lows, you're just there, and we are. Yeah. I think that we will be just chopping around now for a while. And in the meantime, dollar yen, as you talked earlier, I think will stay in the range. So euro dollar, Aussie dollar, these are the currencies that have more upside potential, in my opinion.
Yeah, and I don't want to, well, I guess we can talk a little bit about that. I usually like to, reserve this type of analysis for the ForexAnalytix subscribers. You all know that we do we go through like all of these instruments every day, and then afterwards, Steve ends up talking for like the next 13 or 14 hours. Stelios, what would you say? Steve goes on and on and on about everything else. Just kidding, but we really, Steve's not here to defend himself, so I get to to zing him a little bit. He covers with Stelios like different assets, that people are asking questions about. But I will point out that, like, in the Aussie, we've been buying the Aussie. I've been long this thing now, since yesterday or the day before yesterday. So I'm already building a long position here with a big inverted head and shoulder pattern. Greg, I think you're right. I mean, you got currencies like the Kiwi that has an inverted head and shoulder pattern. You got the Euro that's come out of its wedge. It's just got to break back above the post-COVID spike lows, which comes in at 106.30. We're getting, what I love in currencies is when you have the whole market, when you're dealing with the dollar, when you have the whole market moving in unison, minus the yen. The yen's always its own animal. I never really put the yen in the equation with what I'm doing with the rest of the market. But then you start to see currencies like the dollar Mexican peso, which looks very risky for bulls, heavy. Right? Oh, it's trading heavy. So heavy. I mean, look at this massive support from like all of 2021. We can't even get off of the floor with the stock market, with a 20% plus correction in most indices. I mean, things like that really are alarming if you're long, if you're short emerging market currencies. So, and then you got the Rand that just had a big rejection, following the South African Central Bank yesterday. They didn't weaken the Rand anymore. I thought, well, with risk aversion and, the South African Central Bank, we were going to see a little spike above all this resistance. I was ready to actually cut my short and turn around and get long yesterday, but that didn't happen, which again, this is one of those other things that, hey, if stocks even get a glimpse of a recovery, you're going to see these emerging market currencies really, start to strengthen here. And, that goes back to what Gregor was saying with the Aussie. And what else did you say might gain some strength there?
He likes Euro too.
And actually we have elections in Australia this weekend.
Yes, elections. Yes.
The results should come out our Saturday afternoon towards the evening.
Do you guys have any views regarding the Australian elections?
It's limit border, but the latest I've seen, which is not today, should keep the traditionals in place. But I'm not 100% sure. I haven't read anything about it yesterday.
Okay. All right.
But when we talk now about Asia, I think that it's also important to track Chinese yuan. I think that the recent reversal that we have seen this week, Chinese yuan have seen quite a nice, interesting move. So this is something definitely that can have a positive impact on Asia. They are saying that they will fully reopen early in June. So yeah. I think that Asia will gain some attention here.
Yeah, that's and that's a good point. I hadn't been watching the yuan over the last couple of days. Actually, it's not something I was really focused on, but I'm glad you brought that up because this is and by the way, they did make an adjustment on the 5-year. They tightened just slightly yesterday. I remember I saw the headline on that, and I'm like, and then you saw the Aussie jump a little bit. This is late in early in Asian trade. But it was my son's birthday, so I just looked at it and I was already long Aussie, so I wasn't really worried about it. But now you see the dollar CNH moving a little bit lower. That's China's way of kind of letting us know that conditions are getting a little bit better, and that might also be a result of China coming out of potentially coming out of lockdowns.
Yeah, the thing is about China, if I may quickly say, they did move the 5-year rate, but they were expected to move the 1-year rate, and they kept it still. So I think and then those Shanghai reopening planned for early June. I think that's what made the dollar yuan plunge. At least the offshore. Yuan strengthened overnight. We are going to get into interesting zones, in my opinion. Anywhere between 666 and 660 is going to be very interesting.
Somewhere down here, and you can see this is the reaction yesterday after that that tweak in the 5-year, and then and as you pointed out, I think if China really comes out of lockdowns, that's going to be a pretty big swoon for the global economy. Like if you're trying to figure out, like in my opinion, if you're trying to figure out, well, the S&P is recovering. We've got this, and I'll just give you guys a quick view of how I see the S&P, just so you guys see it. We have this, big head and shoulder pattern. Obviously the neckline's at 4,100. Talked all about this for weeks and weeks and weeks, how big this level was. And even on the recovery, we stopped exactly at 4,100. I mean, within like 0.2 of a pip. And so we all know if we get above 4,100, we're going to get a little squeeze job. Like if you're trying to figure out, how we get back to the 200-day moving average or maybe the 50-day moving average, which, by the way, I think this is going to be the most optimal place to be on the short side of equities, is going to be up here. But if you're trying to figure out how we get up there, I actually think it all lies with China, believe it or not. I mean, I think it really comes down to China coming out of lockdowns and how quickly, and if they do, the longer they stay in lockdown, the less likely we're going to be able to make it towards the 200-day moving average. The more likely we're only going to be able to make it to maybe 4,200 on a recovery. But if we can if China comes out of lockdowns quicker than the market expects, we will get a recovery, in my opinion.
It's very interesting that German DAX is still holding quite well and much higher.
We just ripped past the descending trend line, or getting back at
trying
it.
To see,
yeah. I mean, that's you're right. And just I should point this out too, Greg, and I'm glad you brought that up. That spike, just the most recent spike, this one right here, that was to 618 retracement, a fib level. Now you got like an inverted head and shoulder pattern set up with the DAX. You can see there's the neckline, there's both shoulders, head. By the way, all this analysis is always done in the ForexAnalytix basic technical analysis. I do this every night for all of these instruments. So last night we talked about the inverted head and shoulder pattern here, but you can see it developing shoulder, head, and then there's the neckline. Man, if we rip past 14,300, we'll see 15,000 again. That's not like, that's. I mean, you look at that and you're like, well, that's not all-time highs. But we're not. I mean, we're just looking for trading opportunities here. But you're right, Greg. I mean, we're holding up, right?
Yeah. So if S&P bottoms, then this one could easily be at that.
Yeah. So Greg, since you're here, I'd love to hear what your Elliott wave view is for the S&P right now. I mean, I can pull up, just so you guys know, we can pull up the S&P here and click right here where it says EW, and we can get your views, but I'm not going to, I'll click on Andre, but see, you get there's Andre's views for harmonics, but I can get your Elliott wave views here. But having you live here, I'd love to hear what your thoughts are. And I'm sure Dale, since he likes to follow Elliott wave analysis too, will probably want to hear your thoughts as well. So what do you think?
Yeah, sure.
Always want to hear the wizard. Sure.
Okay.
Let's see it. By the way, we don't have any data today. Dale, do you have an interview coming in?
Not today.
All right, good. It's Friday. Thank God it's Friday. It's been kind of quiet overnight. We don't have any data coming out unless I missed something. I don't think we do. So we can spend a few extra minutes with Greg. So this is good.
Yeah.
All right,
so
cool.
Still, I'm looking at the S&P 500. Let me bring this 4-hour on here. So I'm tracking a complex correction. And what is interesting right now is that you have here land in price equals lag comes around 3,900. And then you have in this area, you also have 221 bars for the first lag. So it's a time projection that equals right today. It's the May 20. So I think it's quite interesting potential zone. Of course, there's just observation. I want to see the response here. But since I think that overall market can be in final stages of these deep corrections, since we have DAX already trying to make higher swing low, I think that even S&P 500 at some point will turn to the upside. So I think that next week could be quite interesting. And as I said earlier, we have this Aussie dollar already trying to turn higher. So I have here this correlation with Aussie dollar to give you the better perspective. So here in blue, we have Aussie, in black is the S&P 500. You can clearly see that there is very tight correlation. But here it was back in January. The Aussie dollar was trading to the downside. It was not been able to recover. But then when the S&P 500 bounced, we then both together moved to the upside. So that's when Aussie quickly stabilized. But what we are seeing now is Aussie dollar in blue is already higher, S&P 500 testing the low. So if S&P 500 will bottom, I think this one will just explode higher. And I think that after the elections, I think that, again, all the views will be on hawkish Bank of Australia. So I think this is that the next any dip could be quite interesting opportunity, in my opinion, here on.
Yeah, let's just hope that the 3850 holds in the S&P, because I have to say, regarding the S&P, and I agree with you, if it can get a recovery, the Aussie is going to really just take off. But I have to say that the stock market is trading heavy. It's like it's gross heavy. It's kind of like I was telling, and people in our community, it's the exact opposite that we saw when stocks would just grind higher for 13 years. It's like every time you tried to short, you turn around and the market's right back up in your face. And that's how the market feels when you're on the long side of the S&P. You get long, and then you turn around for 2 or 3 hours, and it's below your entry point. You're like, damn, how did that happen? It just looked like we were bottoming out.
So for me, it's very important whenever I am tracking some final stages of deep corrections. So I want to see that market actually will confirm that I am on the right track. And we know what has to happen for this. I need to see an impulsive reaction, let's say back above 4,100. That was also this low back from February. So if we can rally in 5 waves back into this area, that's when I would be willing to look for potential long opportunities. Why I will wait now? Because whenever I will see 5 waves up, I will exactly know where is the risk and where I will be wrong. It's obviously at the lows.
All right. Well, Tulian asked for your thoughts on gold and the sterling, if you have time.
Yeah, sure. So gold, I think still it's in a higher degree consolidation here. It's stuck in the range, but I think it's a wave 4. Very nice support still around 1700. Of course, 1800 is the first level that we are currently watching, which could maybe stay in place if we consider that this could be also a triangle. So I think that gold will stay bullish on the longer run, but I'm afraid that this consolidation will just continue for a while here, and that will not see such an easy break to the upside. Everything was so overcrowded, even silver for the last, I should say maybe for the last 2 years, everyone expected that gold and silver will explode to the upside. And if
have you been talking to Stelios? Oh, he already left. Dang it! I was going to harass him a little bit more.
As you know yourself, you said last time that every analyst that you speak with, especially on Trade Summit conference, everyone were bullish gold. So obviously, sentiment is just so extreme that it doesn't go easily through the charts.
It's like Dale and Dale, you've been doing this longer than many people. I mean, since Neanderthals started walking around the earth, you've been trading the markets. I mean, for crying out loud. But jokes aside, you talk about gold. like the gold had the perfect recipe to rally. I mean, you know, you throw it all in there. You know, you got geopolitical risks, you got inflation, you know, you got risk aversion. You know, why didn't gold rally? I mean, those are all the things that, you know, I know in my 25 years of trading, you know, that's been it. And I'm sure you look at Kman, you've been doing this for a long time. Dale, the gold had the recipe and it just didn't do it.
Well, that last trading rally, the miners went up 30, 40, 50%. So, I mean, we didn't break out. We didn't break out, but I mean, it was a good trade. I do think that the upside breakout is just a question of when, in my view. And I was embracing maybe a break under the double bottom there at 1680, like silver cleaned out 2430. But you also have to admit, with a strong dollar and everything, yields going up, it's also held up quite well.
If we
There's a lot of internal strength there for some reason.
Wait, hold on, Greg. Kman, what were you going to say?
Yeah, we discussed gold briefly because we had exactly that question: why gold did not rally more in the flow show? And I think one of the reasons why gold could have been or can be seen as lagging a little bit is the competition we had from cryptos during the pandemic.
Yeah, that's true. And Dale, I mean, you hit the nail on the head. I mean, crypto's taken a lot of golds. I mean, we've talked about this for years, right? I mean, we started talking about this like 2 years ago. Like, crypto has taken so much shine away from gold in recent years. I mean, if I was somebody who was seeking some sort of safe harbor, and you know, I was always thinking, the United States is going to erupt into some sort of, you know, chaos, and I need to get gold and silver, and oh shoot, what is this Bitcoin stuff? I guess I need to get some of that too. So, you know, you're going to get that.
Very portable. You take your wealth with you in one of those little things all over the world.
Yeah, and you know, what again, whether you guys believe in it or not, this is irrelevant. It's the fact of the matter is it's taken away that significance of gold and silver. But anyway, hey Greg, we'll finish up with your thoughts here on gold. So ultimately, what do you see?
Yeah, well, I think that in the short term, I think that we still could see a recovery. Now here, we completed this 5-wave drop from 2000. I've been tracking this one quite closely. Now we are recovering above this trend line of an impulsive channel. So I think that more upside could be seen. Also, watch out for gold-silver ratio. I think that this one is turning to the downside, and overall that's positive for metals. Let me check if I have it here. Okay.
You just had every gold bug jism in their pants.
Yeah.
Dale, you might have laughed there. I thought that was funny.
Yeah.
So gold-silver ratio here, if you connect this trend line, you can see a very nice sharp reversal to the downside. So it looks like a bearish impulse to me, and we know that gold-silver ratio, if we trade to the downside, it's usually positive for metals. So generally speaking, I think that in the short term, gold and silver has room for more upside. I'm more in favor of silver. I will be tracking next week pullbacks to around 21. That's very nice support on the upside. I'm looking for 23, 23, 30 around there.
All right. Awesome. Well, you know, I know we don't have an interview today. I just want to say, Dale, thanks for guiding us every week this week. Do you guys have any final thoughts for today? I mean, I'm just happy that it's Friday. I'm a dollar bear this week. I've been selling dollars all week, and I'm doing well with it. It's been a nice week actually of trading for me. I don't know if I'm thinking that, I don't know if the euro is going to be able to scale 106 today. And if it does, I'll be kind of happy about that. But that's kind of my views right now. And we're going to go into obviously the morning edge for the ForexAnalytix subscribers here shortly. And I'm gonna take over really quick, Grega, and take back the charts. I wanted to ask though, Kman, did you have any last minute thoughts going into the weekend? What you're looking at?
No, I think a lot is in ranges. You were looking at gold. It looks to try to break out of this 30-40 zone, but I'm not sure if it's really going to succeed yet. I'm a tiny bit long. I do think though that if we are going into recessionary territory, if due to hikes and slowing down data, gold might be doing a little better than silver, but that's just my personal view, because silver has this industrial
use, right?
Use, which is might be a bit at risk if the economies slow down.
Buy both. And I hear, since Ryan went to the dentist yesterday, they're using silver for fillings again. So I mean, Ryan had he had a mouthful of metal.
Mercury. No,
there it is. All the silver has gone to Ryan's mouth.
Yeah, that's the rally from 21 to 22. You'll see.
Yeah. Well, that was the rally from 21 to 22. Speaking of which, silver is setting up an inverted head and shoulder pattern and a false breakdown for those of you that don't see that.
You called that early in the week, Blake.
Hey, it's one of those things that I wouldn't want to be short silver right now.
No.
Nope. No, thank you. No, thank you, sir, ma'am. All right. Well, Kman, thank you very much. Stelios is already gone.
It's just us three.
Oh, Dale, last minute thoughts, as we go into wrapping into the week?
Yeah. Do your work over the weekend. Lazy people don't make money.
Ooh,
that's good. That's good.
Have a great weekend, everybody. Dale, thank you.
And I'm just going to have a lazy weekend, man.
hey, wait, before you guys go, I wanted to say, I was listening to, what was it?
Flow Show?
No, I can't get up for the Flow Show. I actually been listening to the recordings of the Flow Show, which is actually pretty cool. I've been listening to those, except Ryan went on and on and on about the calendar yesterday morning. Was it yesterday morning?
But that's the way it's been set up.
No,
right?
And it's good because it covers what data is important going into that trading session. But Dale, you had an interview on Wednesday.
Yeah.
Who?
Jean. Yeah, Jean. If he has a French name.
Yeah, he has a French name. That's right. He went through the Traders Funding Program, and you interviewed him on Wednesday, and I listened to that interview because
there
Dale.
you go.
Dale
Boucher.
There we go. Yes, thank you very much. And Dale's like, hey, you should listen to his interview. He went through the Trader Funding Program. I'm like, oh, I went back and listened. I try to listen to the interviews. It just depends on the day, but I specifically went back and listened to him, and he's like, I was trading. He scalps for 1-2 pips at a time, and he's like, I was doing great, and then all of a sudden, the Ukraine war, that broke out. And so he didn't pass his assessment, but he said he's going to go back and do it. And he loves 8 cap spreads and everything else. But he said something that was interesting, and I'm gonna tell you guys from my point of view. He said, well, one of the things that kind of freaked me out is I know the Eagles are listening. He said, he used the term Eagles, saying that myself and maybe Steve and Dale and Stelios are watching or whatever. I'm going to tell you this much: I don't watch every trader come through the program, but the ones that get my attention are the ones that are in the assessment program the longest. Because what happens is that if I have somebody going through an assessment and if they pass really quick, the first thought I have is they took one shot, to pass the assessment and make their 10% on a demo account, and they did it really quick, or they failed doing the same thing, just doing just trying to pass really quick. or or they fail, and they fail really quick. It's just basically like a lottery ticket. And those aren't the types of traders that we look for. But the ones that are in there, I know people that have been in their assessment now for like 2 months already and longer, and they're just chipping away trying to make their 10% to get to their account. That right there, I start focusing on those people, because I know they're really serious about getting to the next level and getting up to their through their evaluations. And remember, that's the difference between what we do and other, there's a lot of little companies that do this, and they force like time limits on you. I mean, that's not fair. We give you as much time as you need. You don't have a time limit, because the market, it's not pre-programmed that way. The market is not pre-programmed with a time. So anyway, you have unlimited time. So it's the people that are going through the assessment that I see, like I start noticing, John Smith, and I'm just using that name as an example. He took his assessment, a month ago, and hasn't failed, but he hasn't passed, and he's still active. So then I start focusing on that person, because then I know they're really, going through it. But anyway, I just wanted to mention that, because he said that in the interview, Dale. And I was like, yeah, I hear what he's saying, but that really doesn't catch my attention. Not mine. Stelios may be different, but he left. So
it was in his imagination that people are
what's
watching
that?
him. It was in his imagination that people are really watching everything.
It is. It's like, yeah, that's truly what it is. But we do pay attention. I mean, obviously, because we're just trying to find
help.
We're always here to help. That's what we're doing every day here. But we're always just trying to kind of assess and find some really good diamonds in the rough that can pass the assessment, and then move along into the live program.
I told John I'd love to be his broker.
Right. That guy scalps like crazy.
Yeah.
So
really.
Yeah. Anyway. So it's I was like, man, could you imagine? And I don't know. Kman's probably still here. Greg is still here. I want to say it was John Paul, but that's not correct.
Jean-François.
Francois. That's correct.
Jean-Claude Keely.
But he was scalping for like 2 pips all the time, and I'm like, dude, that's tiring. At my age, it's tiring, and I turned 50 this year, and I can't do that. But that's me.
Well, I've been doing stuff like that in the past, but it's tiring, really, really tiring.
Yeah, and Kman, I know it's hard for you to admit that you're like almost 90, but I mean, come on. By the way, just so everybody knows, how many years did you spend on a trade desk in the FX market?
34 precisely.
That's crazy. That's awesome.
Did you get a gold watch? Have you ever been to a retirement dinner?
No,
for a trader?
But I didn't look behind me if the boot that I got was golden, but I didn't get the gold watch.
Well, Kman, we are truly blessed to have you as part of the team. And I say the same thing about Dale and about Grega, and not so much about Stelios, but he's not here to defend himself. That's why I can say that. No, I'm
have
just
a great
kidding.
Weekend, guys.
Yeah, we love our team. Thank you all for supporting us on our live shows that we do, and I hope you all have a great weekend
and do your work over the weekend and
enjoy, everyone.
Grega, have a great weekend, and don't just count your pips, count your blessings. If you're not in a good community during the major trading hours, which faces really only a half an hour of analysis, if you let go of the interview, you have to be around people all day that do this, and surround yourself with people that are better than you. Don't be intimidated by that. Learn from them. And that's the end of my homily. So have a great weekend, team, Dream Team.
Have a great
and
weekend, Dale.
and F.A.C.E, and we'll see you all next week. We left it on the court for you guys again. Way to say thank you is participate with us. Adios, everyone. Take it easy, guys.
Thanks.